You would have been made to believe that you should invest in the stock market because the stock market can give you 16% rate of return for a long period of time. What is the argument in favor of it? People will show you in the past for many decades the Indian stock markets have given you 16% rate of return. That is why you can expect a similar return to follow in future. Is it the truth? Yes, Indian stock markets have given 15-16% CAGR returns from the time Sensex has come into existence in 1979. Equally certain, or it's a judgmental call today, that stock markets will not give you 16% rate of return going forward. If this is the case, what is that you should do? Why did the Indian stock markets give 16% return? Why it will not give the similar returns going forward? In this episode, I am going to discuss all aspects of this particular story and try to arrive at a decision what is that as an investor you should expect and what is that you should be doing. This is NRI Money Clinic for you, and I am Dr. Chandrakant, but investment consultant and a financial planner.
NRI Money Clinic. No hype, just the right advice.
While it is a true fact that the Indian stock markets gave you 15-16% CAGR returns in the last 41 years, why did it give 16% return? To know this, you have to dissect these figures a little bit more. Only when you dissect this particular figure and see the true story behind it, that will give you the lessons what you can expect going forward. To know the story of Sensex, I will dissect this period between 1979 to 2020 into two portions. One portion between 1979 to 1994 and the second period from 1994 to 2020. These years, these time intervals are very, very important for various reasons. 1994, the Nifty came into existence. The base year for Nifty was 1994. 1979, Sensex had a base year and its base value was 100. When we see what happened between these two time zones, 1979 to 1994 and 1994 to 2020, there is a lot of learning for all of us. Now let us look at what happened between 1979 and 1994. Sensex had a base year of 1979. The base value of Sensex was 100. By the year 1994, Sensex was at about 3,500 levels. For ease of understanding, let us see that this has reached 4,000 levels. In fact, in the year 92 itself, Sensex has touched 4,000 once. The 100 value went on to become 4,000 on the Sensex, which means to say Sensex climbed 40 times in a time span of just 15 years. That works out to a staggering 25% CAGR. What happened between 1994 and 2020? Sensex, which was there at about 4,000 in the year 1994, went on to touch 42,000 recently. That is, in a span of 26 years, it just climbed 10 times. In the first 15 years, Sensex climbed 40 times, and in the next 26 years, it just climbed 10 times. So the performance of the Sensex during the first 15 years was not repeated in the next 26 years. The story of Nifty is similar. Nifty didn't have 1979 to 1994 figures. It came into existence in the year 1994 with a base value of 1000, and it went on to touch about 11,000, 12,000 recently, which means to say Nifty also climbed up by about 10 to 12 times in a span of 26 years. The period of 1994 to 2020 gives a return of 10% CAGR in the Indian Sensex as well as the Nifty figures. So when we dissect this figure of 41 years into two different parts, the returns that is visible is entirely different. Most of the gains of the Sensex, what we claim to be 16% CAGR, has come in the first 15 years, and the next 26 years it has just given about 10% rate of returns. Now let us try to understand why did the Sensex give 25% CAGR returns between 1979 to 1994 but did not give even 10% return after that in the next 26 years. The period between 1979 to 1994 is marked by three important things. Number one, it is a period of very high inflation in India. It's a period of very high fixed deposit rates in India. In fact, the fixed deposit rates which was prevailing in India at that point of time was anywhere from 10 to 14% rate of return. Yes, you got to believe this. You can do a Google search on this. I'll also show you the FD rates which was prevailing during this particular period here. It's a period of very high inflation and a very high fixed deposit rate. There is two more events during this particular period. One was a Harshad Mehta scam. In fact, Sensex has climbed from 100 to 1100 by 1991, which means to say in 12 years it moved up by about 11 times. But in 1 year after that, due to this Harshad Mehta rigged market, it moved up by 300%. Yes, in one single year, the Sensex moved up by 300%. From 1100, it moved all the way up to 4000, 4200 level before it came crashing down. It's not a normal market, it was a rigged market. The share certificates were stolen from the bank lockers and it was given in the market. This scam resulted in the dematerialization of the shares. So this is one reason why Sensex went up to such a high extent. Post Harshad Mehta scam, the stock market corrected deeply and from 4000 level, the stock market came down to 2000. But luckily enough, the same period is marked by one another thing. It's the government of Manmohan Singh and P.V. Narasimha Rao which initiated reforms in India. Markets cheered this particular move and markets again moved up all the way from 2000 to 3500, 4000 levels. So this rally which happened from 2000 to 4000 during Manmohan Singh's finance minister role is a rally of hope. In fact, it was ahead of time. Markets thought Indian markets will do very well and they moved up ahead of time. That is the reason Indian Sensex gave 25% CAGR during the first 15 years. So it's due to inflation adjustments in the Sensex, it's also because of the rigging in the market, and it's also because of a rally of hope which took place during this particular period. The period between 1994 to 2020 stands in contrast to the first 15 years. The first 15 years, 1979 to 1994, were marked by high FD rates, high inflation rate, and a very low growth rate. Contrast to that, 1994 to 2020 resulted in a different period for India. It's a period where India was growing high, the inflation has come down, and the fixed deposit rates have also come down. Likewise, stock market reflected the underlying trends and it gave 10% CAGR between 1994 and 2020. In fact, most of the gains in the Sensex between 1994 and 2020 has come within a span of few years or within a few months. The Sensex didn't do anything between 1994 and 2003. There was a dot-com bust in between, but even in 10 years, Sensex was stuck at the 3,500 level for 1 decade long. But between 2003 and 2008, Sensex went up all the way from 3,500 to 21,000 before coming crashing down again back to 8,000. So whatever the returns that came, they came within the span of 3 to 4 years. Then again the markets revived and it was languishing at about 15,000-16,000 level. Then came one another rally of hope. This time the rally of hope came through the election of Narendra Modi as the Prime Minister of India. In fact, this rally started well before he was chosen by the Indians to be the Prime Minister of India. It started in the year 1994 and Sensex rallied all the way from 16,000 to a level of about 30,000 within a span of 1 year. In fact, most of the gains Sensex has got has happened within a span of few years. or within a span of few months. One, it happened during Harshad Mehta period. 91 to 92, Sensex climbed up by 300%. Then it crashed. Then during Manmohan Singh's reforms period, it moved from 2002 back to the 4000 level or about 3500 levels. Then the next up move happened in the year 2004 to 2007, where it moved from 3500 to 21,000 level. The next major up move happened in the year 2013 to 2014 period, where Sensex moved up again from 16,000 to 30,000 level in no matter of time. There are lessons for all of us in the history of Sensex and Nifty. So what are the lessons for the investors? The lessons is, don't expect a regular return from investing in the stock market. Returns from stock market will come in bursts. You can expect this burst to happen once in a decade, maybe twice a decade. Don't expect it to happen on a year by year basis. That will not happen. All the story of getting great return is because of this burst of performance which happens during some years or during some particular months. The second lesson to learn here is the major lesson. That lesson is, don't expect return from stock market as a certain number return. It's 10%, 12%, 15%, 16%. Don't expect a particular number as a percentage of return. Stock markets are good at doing something unique. Stock markets will be two things. One, it will generate a return which is more than the bank rate, and it will beat the inflation and create wealth. Between 1979 and 1994, FD rates were in the range of 14%, 10 to 14%, and the stock market return was higher than this. Inflation at that time was also in a similar levels, and invariably the stock markets gave more than that. Likewise, between 1994 and 2020, the bank rates were somewhere between 5.5% to 8%, and the Sensex returned about 10%. Inflation during these last 26 years as an average could be somewhere around 6 to 7%, and the Sensex beat inflation hands down and generated about 10%. So what to expect from the stock market return? Stock markets will generate returns which are in excess of bank FD rates, in excess of underlying inflation. This is an unmistakable lesson investors can learn. But you need to be waiting. When will these returns come? Will it come in a year or two? I do not know the answer. It will check your patience, but if you are a waiting person, definitely they will reward you. So going forward, how much do you think the stock markets will generate? Your investments in Sensex, Nifty, mutual fund, ULIPs, direct stocks, or whatever it is. It will definitely not generate 16%. For it to generate 16%, you should have certain conditions. One, if the inflation is very high, or if the growth is of that particular magnitude, then only it can generate 16% return. If growth is 14%, maybe yes, but I haven't seen anywhere in the world such large economies growing at 14-15% kind of a return. Likewise, if inflation is very high, it has its particular problem. So if inflation is high, probably it can generate so much of a return. Otherwise, a simple thing to remember is it will generate 3 to 4% more than the bank rate or the underlying inflation. What is the bank rate today? The bank rate today is about 5%. What is the inflation today? It is in a range of 3 to 4%. So if you derive an answer from these particular factors that are available to us, then it is fair to expect as a long-term average from here onwards, the Sensex could give you somewhere around 8 to 11% rate of return depending on underlying inflation and the FD rates. Dear viewers, if you like the topic that I discussed, please like this video. If you are watching this program for the first time, or if you are yet to subscribe for this channel, please press the subscribe button and press the bell icon. Don't forget to share this video with your near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I will be back with you with one more episode very soon.
Press the bell icon for more details and subscribe our channel.